What's up? Everything Money. How are you? Welcome to the big show. This is my son, Gio. He just turned 11. We analyzed his $5,500 portfolio with all those bangers, Gio. You get the oven mitts ready, and you'll be a video coming out this week on Gio and his portfolio. Get out of here, monkey. All right. Welcome, everybody, into the show. I see you all over the world. Paul, this is the highlight of our weeks. Of our week. What am I saying? Well, most weeks, but this is having you on the show and Trader Mo and his handsome self and his beautiful new shorts. We just welcome everyone in. This is the highlight of our show, the big show, Tuesdays at 1. We welcome you in all over the world. As always, patrons, remember on Thursdays now, we are going live just for you, Patreon-only live streams. We get about 150 people, and we take all your questions. This is on Thursdays at 2 p.m., but for now, we're here on the big show. We are taking donations. Every week we take donations to take your stock requests. Why are we doing this? Well, the chat is getting absolutely completely out of control. It's like 100 comments a minute. It's absurd. I'm going bonkers trying to read them. So we're dialing it back. A $50 donation to the National Institute of Alcohol Abuse and Alcoholism is the charity this week. The National Institute of Alcohol Abuse and Alcoholism. Go ahead, Paul.
Specifically for a patron who recently lost a family member, and they actually reached out to us and said, hey, would you mind if you made the donation to that? And we said, absolutely. They made the request for it. Yeah, it went very well. Remember, it's the net proceeds. Every single dollar received in super chats that we get goes to the charity. I immediately, within 3 or 4 days, when YouTube tells me how much is given, I go to the website, I pipe in the amount, and I send it on. So it's for a great cause. We're not doing it just to make money like other people are. We're doing it to, and imagine, Seth, when we're have a million subscribers, and we're going to have 10,000. I mean, it's going to be $10,000 in a session of donations that we're going to try to donate to charity.
Last week we got well over $500 or something, Paul, to our charity, and so
no, it wasn't. That was before. It was $341 net after all fees.
Okay, but anyway, that's the story. So if you want an individual question that's burning inside, you can take a $50 donation, and Susie's just throwing
$10 donation for an individual question. $50 for the stock, and we're going to limit it to 5 stocks.
Thank you, Paul.
And Susie's just giving us money just because she's a nice person.
In general, if you're new to our channel, we welcome you in. As always, I'm bringing your common person questions to Paul and Mo. We talk about value investing, a disciplined approach of long-term investing with Paul. And if you want to trade on charts and you want to trade quickly, we have Trader Mo in that Bidnass Nation who helps you on a daily basis of getting those trades in, watching those engulfed in candlesticks, and getting after making small percentages of growth. Not 10xing, folks, just a small, disciplined, tortoise way. And Paul, speaking of Paul, I just started reading the Turtle Trader, and I'm instantly drawn to it.
Oh, are you really instantly drawn to it?
Absolutely. I could hardly put it down, and then I did.
For real?
But yeah,
because I felt the exact same way about it.
Gio, you should read this book as well, The Turtle Trader.
Mo, did you?
What?
Or did you like The Turtle Trader? Or was
I
it
liked it.
I read it twice.
Like you, but I liked it.
I read it twice already. I loved it.
Yeah, you loved it.
Ironically, I got it as a gift about 1.5 years ago, and I just thought it was some BS chart reading thing because the person who gave it to me was the person teaching me charts. I don't like charts. It's not BS. Well, don't speak to me.
The reason you kind of picked up that book is because you were learning about charts. Remember, you had that tutor, coach,
That was the
whatever.
guy who bought it for me.
But you were doing his. I remember
I just
you were
didn't
doing
like
his weekly
charts.
thing,
I
and
was
then you
like,
rolled into
charts are
that,
boring.
So,
And then one day he and I were talking again with Moskal.
Yeah.
And they said, well, that was what the book's about. I'm like, wait, what? They're like,
Yeah.
yeah, it was all about this. I'm like, okay, I went home that day and read it.
Yeah, I remember.
People are asking Paul, why do you always wear the same clothes? It's not because he's trying to be like Steve Jobs and all these guys.
Is that what
wear the
somebody
same.
said?
Yeah, no, I asked him to wear the same shirt because when he wears off-colored shirts, it looks bad on camera. So here he
But in
is.
fairness, I do wear my Crossroads Group white or black tee pretty much. I mean, long sleeve tee pretty much every day.
Along with the Crossroads
you wore
Group
it to
black
dinner the other
thong.
night.
Yeah, thong
Yes.
that he wears. Yes.
Well,
for
the
sure.
thong is actually a G-string.
Okay,
It's not
I
a
got
thong. But I change my shorts. I change my underwear. Change my socks. But yeah, I tend to do that stuff.
That's right. And John is asking if we can get Paul. We need that drop from last week, Tim, that says when Paul's like, "This stock is banging." We got to use that stock. That's for sure. That drop, that sound drop. So here we go, folks. We have some charity, some lovely people donating. Our first stock today from a $50 donation. Paul, who was that from? Once the WWE.
Let me look. Hang on a second.
Oh, this is from Garth. Garth,
thank you, Garth.
WWE. Now, Paul, growing up, I worshipped WWE wrestling. I thought it was real. I had the wrestling.
We were the WWF days, if you remember.
Pardon me,
Don't
right?
you remember
Not
that?
the World Wildlife
Tim
Fund.
verifies that too. It
Of
was
course.
all WWF when we first started, and WWE was like the bastard stepchild of like, and then all of a sudden WWE became the big thing.
WWE's not real?
Well, they had to change it because the World Wildlife Foundation with the panda icon.
Tell me you're joking.
That's absolutely why
Seriously?
they changed it, Paul. You didn't know that? Of course, you've been out
I
of the
didn't
game.
know that. But
Yeah,
WWE was a separate entity before.
No, you're thinking of WCW. But currently, we're talking about the WWE as a
wrestling
company,
straight,
and
bro.
obviously, it's hilarious. These muscle-bound, tattooed dudes, Mo, they really enjoy sweaty guys in thong bikinis arguing, and so that's what this. But as a child, I worship this. I mean, Paul, WrestleMania 7, when Hulk Hogan versus the Ultimate Warrior, I was in tears as a kid. It was just the greatest day of my life seeing that wrestling match. But today, we're talking about the WWE as a corporation. This is World Wrestling Entertainment. The ticker symbol is WWE. And of course, they've been around forever. Founded in 1980. Primarily known for professional wrestling, Paul. I didn't even know this was a stock, but Garth is dying to get after this. So should we take our
So, as everybody has seen, I'm sure, the software has been updated, a new look designed by Pamela. Our great designer, Tim, is now in charge of the software, so it's going to go much better now. He is so much better at software development than I am. I am poop in the butt when it comes to software development. I'm really good at creating a vision. Tim's great at implementing. So,
people want to see dark mode before you jump into this, Paul.
guys, look at this. Dark mode, baby. Look at that. That is sexy. I'm bringing sexy back. Look at that. That's so cool.
And show the symbol.
And look, and we also have all the logos right here.
This software is
That's
available.
not the right one.
This software is available to our patrons, and
not the
obviously
right
we're
one.
still building it out. But of course, you patrons have been loving this, and you can certainly put in the chat, how much you love the software.
Okay.
And as always, Paul, before we get going with WWE, I'd like to make sure put where you are in the world. We love seeing people from all over the world tuning in. And Mo, I'll tell you what, we've almost hit your morning numbers so far. We're at 399, and so if we keep going,
Already?
we might be able to hit Mo's morning numbers. So here we go,
I think
Paul.
we're going to hit them.
Let's get after
Well, 704 is our record.
World
So,
Wrestling Entertainment. Go ahead.
$4.5 billion company, PE of 30. So that's an X, but a good profit margin of 16%. That's a check. Okay. Dividend yield, adorable, 0.83%. They spend $37 million a year on their dividend yield. So remember, guys, we have to go back and look at their free cash flow to make sure that their dividend yield is supported, because everybody's dividend's always there. It's not always there. So first metric.
Pillar number 3 is revenue growth over the past 5 years.
746, 946. Check mark there. Okay. Net income growth.
Profit growth. Go ahead.
20 million to 150 million. Shiggity
Jeez,
check
this is
there,
last
kids.
5 years. Look at that.
Oh, yeah, that's
a lot.
incredible. And look, they were losing money a couple of years. That's pretty good.
Frank is in Mongolia. I hardly even know if some of these people are like kidding. I mean, Mongolia? Wow, I'm so stupid. It's incredible. You guys are all Montreal, Arizona, Norway. Incredible. Let's get to pillar number 5, which is shares outstanding.
76.44 to 77.38. So that's an X. It is not by much, and they've had fluctuations here, but it's still an X nonetheless, but it's not bad. Usually when there's an X, it's because the company is just issuing shares with breakfast.
Okay, current assets over current liabilities is pillar number 6.
614 million and 406 million. Check mark there.
Great. Okay, we're doing great so far, Paul. We have X's on PE ratio and X's on shares outstanding, but just a little baby X for the shares.
Yeah, it's not by much, but it's still an X.
Free cash flow growth is pillar number 7 if you're following along at home.
So guys, remember free cash flow is cash from operations less your capital expenditures. And Uncle Paul has added a line in the investing section of the cash flow statement. By the way, Tim, we might want to make this a little bit more narrow, but either way, these blocks, it allows you to, it goes 36.1 to 288 million, check mark there, with an average of $120 million in free cash flow.
36 to 288?
Yep. And if you remember, their dividend yield is about 37 million, I believe. Or was it 13 million? How much was the dividend yield? 37 million.
Adorable.
So they can easily afford their dividend. And the average over the last 5 years is 120. So for the last pillar, 120 times 20 is $2.4 billion. That is an X.
The market cap is $4.8 billion.
Yeah, so it's about double where we want it to be. It's selling for a really high multiple. And the other thing, guys, is this free cash flow number in the last year is significantly higher than the previous years. You have to find out what happened in their balance sheet that allowed them to generate so much free cash flow and make sure this is sustainable. Because you don't want to buy in the best year just thinking, oh, this is the best year, and then all of a sudden it goes back to 150, which is still a record, but not quite the 288 and drives that average down.
The stock price for this company, Paul, in April of 2019 was $96. It's down to $57. I mean, you're not buying this anywhere near this price.
Now,
right?
I will say this, though. I would, if this 290 is sustainable, I'd probably be looking at this company.
But 290 is so much more than all the other years.
That's the thing. That's what I'm saying. That's why invest. But look at this, though, Seth. We had a $36 million year here. So you got to understand why is the free cash flow up eight times? That's a big number. That's exactly 8 times more free cash flow.
Let us know in the comments if we're missing something. I'm guessing they get a ton of revenue for their tours, their wrestling tours, and all the fans that fill these stadiums, the WrestleManias, all the stuff. Yeah, I'm waving off my son. He wants to add a point. We're not going to do that, Gio. I love you. So Mo, what about people trading WWE? What's it look like on your charts over there?
So just looking at it and going back, 3 months now? This is pretty, it's just stuck at this resistance level. So it can't get through. It's there again. It did recently do a sweet spot reversal a couple days ago. So you do have an uptrend right now. The thing that you're going to need, and the thing that I went and just looked at, is the average volume on this stock is 850,000 shares traded per day, 858,000 to be exact. That's very low volume, so it's going to be very difficult for this thing to press through unless something happens. I don't know the status of WWE. Maybe somebody does. I don't know if they're touring again and filling stadiums again, but maybe when that happens, if that hasn't happened, this thing can push up and start moving forward. But it's something to keep an eye on if you really want to. Seth?
Mo, thanks for your hot take on that. My apologies.
No problem.
You guys are incredible with the donations coming in. Paul, final take on WWE. I would say, well, you kind of already gave it, but let me reassess this, folks. We just did a video recently on the rise and fall of companies like Workhorse, Nikola, Lordstown Motors, all of which had this parabolic rise. And even when we did the videos saying don't buy here, you guys told us we were nuts. And of course, all of them have fallen at least 75%. Upwards of 85%.
Yeah.
So you might say, wait a minute, WWE is never going to go back down in half, Paul. That can absolutely happen, right?
Absolutely can happen. It happens all the time. And when people say that doesn't happen, I'm like, okay, well, go look at any company, look at the last year or two, and you'll see a massive fluctuation in prices up and down. It just happens all the time. And can I make a quick thank you for all the patrons? Guys, we are at almost 2,800 patrons. This thing is going absolutely phenomenally well. I'd like to thank Crispy Fun, Alexandru, Ian, another Ian, Adiola and Nilsson have just signed up for the Patreon for the software, 80 cents a day. Gets you all the software plus all the extras involved with it. So this is awesome. And
congratulations to those in the Patreon. If you're just signing up, we are giving away a Tesla here in the next less than 8,000 subscribers. When we hit 50,000, we are randomly putting the patrons in a randomizer and choosing one person to get a brand new Tesla Model 3. And we'll replicate this process at 100,000 subscribers later this year. So for everyone out there saying we're just in this for the money, your Uncle Paul is swiping a credit card for $76,000 to hand to our patrons this year. And so cut the crap. Okay.
I don't think anybody say we're doing it for the money, but
no,
I'm sure
Paul,
people do think that.
That's definitely, these guys
they do say that.
Hello, one of our dear friends. It just keeps saying how we're only in this to sell people on crap. We're just selling crap, Paul. You know that.
You don't literally mean one of your friends. It's one of the YouTubers.
Of course.
Okay, gotcha.
Yeah.
So guys, the software. I'm gonna give you guys a quick software update. Well, do we have it? We don't have another stock.
We do have two, but go ahead.
They paid $50.
Garoy did, and Jason Brown did.
Jason do the $50 or the 30?
I got it right here in front of me.
Okay, what's the next stock then?
Okay, the next stock, Garoy. Let me know if that, Garoy. Let me know if that what currency that is, because I'm stupid. Jason Brown is asking for FTNT. Fortinet.
Okay, let me roll right into it. You ready, guys?
Before Paul does, I'd like to let you know, if you're watching this video later, we have no idea what this company is. We've done zero due diligence. We're taking live requests, and we're going to look at this company from a 500-foot view in the financials of this company and whether it might be a buy or a void. Paul, this company is Fortinet.
$35 billion market cap, 71 PE, massive X, 18% profit margin, check. Is it software?
Fortinet is an American multinational corporation headquartered in California. It develops and sells cybersecurity solutions, including physical products such as firewalls, yada, yada.
0% dividend yield. So, guys, it's a really high PE. Now, one of the things I want everybody to remember is with high PEs, there could be very, very recent write-offs that affect that PE number. That's how we look at cash flow. But so far, 1X and 1 check. Now, the income statement for revenue. 1.33 billion to 2.72. Big check mark there. Nice doubling of revenue. Profit from 40.78 million to 489.
That's 10X, huh?
That's 10X, and there was a big jump in 18 and 19. My question would be, why is that? Was there an acquisition?
Huge jump. Let us know in the comments. They manage firewall.
Shares outstanding, 175 million, 163, check mark there.
This is pillar number 5. They're going down in shares?
Yep, they're going down in shares. That's a check mark there, guys.
Very nice. How about pillar number 6 is current assets over current liabilities?
3.8 billion versus 1.88 billion. So definite check mark there, and they have 4.3 billion in total liabilities. So they almost have enough cash on hand to pay off all of their debt completely in the company. And for the big mother of all mothers, free cash flow, guys. Ready? We have 324 million to 930 million. Check marks all around with an average of 600. 600 times 20 is $12 billion. This is an X, guys. So this company is, in fact, selling for a huge multiple. Just on last year's cash flow, they're selling for 35, 40 times free cash flow. This is expensive. So unless you think this company is going to grow at huge numbers every year, because remember, guys, the value of a company is the present value of all its future cash flows. The value of any investment is the present value of all future cash flows when deciding how much money you want to make. It's just math. If you're going to get X amount of dollars a year for the next 100 years, you can determine how much you're going to pay if you want whatever return you want, right? So in this situation, if you're going to generate, even though this is increasing, even if it increases at 20% a year, we'll have a stock analyzer tool, part of the software here in the next few months, that will tell you, assuming cash flow growth, what can you expect to get as a return on this company? That's the issue here. So I just think it's expensive, but I like the balance sheet. I like the cash flow statement. I like everything about that. Keep it on your radar. Wait for it to drop significantly in price. How much? I mean, it's got to probably drop 75%, unfortunately.
I told him to open it because I'm just like, do you see me dripping in sweat over here? It's like 100 degrees in here.
Well, then let's put the AC on.
I love you guys. Folks, Paul, there's people watching from South Africa, Sweden. Someone's watching. Alex is watching from Hudson High School cafeteria.
No, he's not.
Alex, you might be interested. We did a video on my son's portfolio that's coming out later this week, and the massive growth someone of your age and stature can have if you just get a little bit of money in. I mean, Paul, it was like $56 million. A Geo could be worth just a general return.
Does he know that we went to Walsh?
He does now.
Why would we say that? We went to Hudson. He goes to Hudson. Why would we be like, hey, we went to Walsh?
I don't know.
By the way, Andrew grew up in Hudson.
Oh, okay. How nice. Hi from Denmark. Yep, of course. And Brandon's from Wakanda. Mo, are people trading Fortinet? FTNT.
So this is a great example of a stock that if you get it when it crosses from being oversold into the sweet spot back here and getting a good run and then going sideways for a very long time, this is what you get. This went from about $107 to, what's it at now? $215, $55. And there was a little blip in there about 10 days where you would have had to exit your position. This is a great example of just adding on engulfing candlesticks, following your trend, trusting your trend, and doing what the chart tells you to do. Now, as for doing something right now, this is not something that I would get in right now. I mean, you've been in this overbought area for a very long time. The problem with that is the probability of it dropping below and having to sell like you did back in March, the probability increases. So for me, this is not something that I would be interested in now, but this is a great example of stocks that you guys need to look for so you can capitalize on these massive runs that are very safe from a trading perspective.
Mo talks all about the trading in the morning, Mo in the morning at 9 a.m. And on Fridays, he's going into his Patreon wins. He talks about, he gets actual video. Mo, what about that? Did that video file thing go through? We're looking to feature you patrons and your trading wins for the week. And Mo and I have been brainstorming how to get that done. So we're going to have you guys on the show moving forward. So, Paul, final take on this company.
Just wait for a cheaper price. And that, guys, that's the very going the going advice we have on a lot of stocks today, and it's a very common comment. Like, this guy doesn't like any stock. Unfortunately, right now, it's not any stock I don't like. I still like Intel. I still think HRB is selling for about what it should sell for. But you got to be patient. Everything goes in cycles. We're here to teach. You're here to learn. We're all here to learn about the future and how we wait for the right time to buy all stocks. So what's the next company, Uncle Seth?
We have 3 more that just came in. Congratulations, guys! Great job.
So we're max now. We're done, right?
Yeah, this is all donations today. If you're just joining us, are going to the National Institute of Alcohol Abuse and Alcoholism, a foundation that's very near and dear to one of our patrons' hearts, and so all the money today will be going to that. Let's see. The next stock is from Ann Bosserman. It's NXST.
Next Star Media Group.
Thanks, Paul.
So, guys, while Seth finds out what they do, $6.6 billion market cap, 7.7 PE with a 19% profit margin. So we got 2 check marks to start. A dividend yield of 1.56% for $100 million a year. Okay.
Next Star Media Group is an American publicly traded media company headquartered in Irvine, Texas. They have about 4,500 employees, and they've been around since 1996. Their subsidiaries are news stations, WFLA, blah, 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 Tribune Media, a bunch of stuff you guys have never heard of. Next Star Media Group. How is their revenue growth, Paul?
1.39 to 4.52, check mark. I would bet a lot of this has to do with acquisitions, though, guys, because this is massive growth for media. Even for media, it's a big jump. So net income
profit growth over the past
75 million to 855 million, check mark. Again, 11x. I got to think it's acquisitions. Let's look at their shares. Their shares have stayed actually down, 44.2 million down to 43.3. Check mark there.
Shares outstanding. Is this is 5 checks, Paul? Yes.
Yeah, it's 5 checks.
I have
so
5
far.
checks. Here we go. Parallel number 6. I'm baffled, folks. I can hardly speak. Current assets over current liabilities, baby. What is that?
1.38 billion versus 729 million. Check mark. And like I thought, a lot of long-term debt on this company. Media companies with stations, TV stations, they tend to load up on a lot of debt. They have $10 billion in total debt. That's a lot, guys. So just keep that in mind when reviewing this company. Understand their debt. Understand the covenants in their debt. What has to happen for them to get called in the debt? How are they paying it down, et cetera? That's a very important part. We've talked about changing 2 of the pillars. One of the pillars I'm going to change is probably having to do with long-term debt as ratios for the debt as opposed to current assets over current liabilities. So our famous free cash flow statement.
This is free cash flow, pillar number 7.
It goes from 146 to 1.1 billion. Check mark.
Oh,
now, Seth, look at this, though. In the last year, they went from 478 to 1.1. I mean,
what is going on with this place?
The average is, I got to make this a little bit smaller, guys.
Go ahead.
The average is 435 million, but it's heavily skewed in the last year with this 1.1 billion. So 435 times 20 is 8.7 billion.
The current market cap is 6.6 billion.
So it's check mark there. But again, 6.6 billion on 1.1 billion in the last year. Go find out what happened this last year that caused all their oh, look at these acquisitions here, by the way, Seth.
Show it to me, baby.
2.5 billion, 4.2 billion. So in the last 5 years, their revenue jumps were probably because of those 2 things right there. Huge jumps in revenue. So keep this in mind, guys. Now their jump in free cash flow, Seth, might be because of this acquisition they did at $4.23 billion.
Did I mishear you about shares outstanding? Someone's saying we might have missed an X, and I might have just
No, it went down.
Oh,
they might be looking. Yeah, it's check mark.
Okay.
Let me make sure. Let's go to our 8 pillars. Oh, shares outstanding. Oh, that's.
Did I blow it?
No, I blew it. Maybe it's because of the size of the. Oh, they did the wrong year. Got it. That's an error. Let me find out. Let me go report it.
So we obviously this software we built ourselves. Paul pays about $30,000 a month to get this software cooking for you patrons, and we just launched on April 15th. So there are some errors, and we certainly appreciate you guys reporting the bugs, and for sure. And so let's Mo, what are people doing with trading next star?
So I'm going to show you from a long-term perspective, then I'm going to show you a swing trade because Nick, Dads with a Purpose, just pointed it out. So if you look at again, this is the same thing that we just saw in the last stock. Grab it back here when it crosses into the sweet spot and it just goes sideways. Now this one, granted, it dropped a couple more times in that period, but you're getting to that all-time high area again, so you're facing a lot of resistance. Now let's switch over to a swing trade, which is my day trading chart. A little more detail, but you can go in there and maybe make a quick buck because I'm seeing right here, we're at about 162 of the high. If we don't have any resistance above us, so except for this one line that it's at today, if it can get through that, you might be able to squeeze out about $10 a share here. So this chart is more for the more day-to-day people, 1 to 5 day trades. Go in there, try to make a little bit of money and exit your position. You're not going to be sitting in this for longer than, say, 10 days at the absolute most. But that is the point of what this chart is. A little more detailed, a little more emphasis on the resistance points and support levels.
All right, so great question from David Lose. Do you think it's bad that the revenue growth is mostly because of acquisitions? I don't like when revenue growth is only from acquisitions. So one of your important things to do is do more research to see how much that revenue growth would have occurred. What were the stations from 5 years ago doing in revenue versus today? If you just isolated those stations, see how that's going. Because that'll be important to see how the company itself internally from natural growth is growing in terms of the revenue. Because anybody can grow with acquisitions. You can mask a lot of issues within a company. Like when Borders Bookstore, they would just grow from acquisitions even though same-store sales started declining. But they would still show growth because they were opening more and more locations. Well, that ended up being their downfall. So that's a very great question by David, and it's something you have to watch. That's why whenever I talk about revenue growth and I look at the big jumps, I think to myself, is this because of acquisitions? Because obviously, you have a company generating $10 million in sales, and next year it does $9 million, but they made an acquisition that gave them $3 million extra. It shows like it's a 20% increase. In actuality, their existing business went down 10%. It's something to very much consider.
Will you pull up white charts real quick?
Yeah. Are we doing a foreign stock?
Yeah. Joseph is asking for a company. The ticker symbol is ASHTY. This is Ashtead Group. Ashtead Group is a British international equipment rental company in London. It's on the London Stock Exchange.
Oh, they do Sunbelt Rentals.
Okay, they have about 13,000 employees, and they were founded in 1947.
1,105 stores.
Go ahead.
$32.7 billion market cap. PE of 41. X off the dribble. Pretty high, but a good profit margin, about 15%. Check mark there. And an adorable dividend yield of 0.8%. So 0.8% on 320 is about $240 million. Let's call it 250. So their dividend yield is about $250 million a year. So we got to make sure their free cash flow can support that. All right. So far, 1X, 1 check on Sunbelt Rentals parent company.
Joseph's saying this is URI's largest competitor. Or I'm sorry. Yeah.
United Rentals?
Yeah. Okay. Got it. Sorry.
Yeah. United Rentals is great.
Okay. Keep going. Well, revenue growth over the past 5 years for Ashtead.
Here's the deal on Y charts. Because Y charts isn't as good as us, they only report the full year. And look at this date. April 2020. We don't have the April 2021 numbers yet. We can go look at the previous 3 quarters, but let's just do this right here. 3.4 billion to 5.8 billion. Check mark there. Again, in a store like this, in a company like this, you want to find out how many more stores they opened and how much the revenue growth was same store sales versus new store openings. Very important.
How about the income how much does this Y charts cost, Paul?
$500 a month. Well, it's between $200 and $500 a month.
Okay, just making sure because they're still blowing it as well as right with the updated data. So profit growth over the past 4 years.
Guys, that's the thing you have to remember. There's always going to be bugs in everything. I find errors on Y charts all the time. I just report it to them because I know how it works. Profit growth, 612 to 937. Check mark there. About a 50% increase. Excellent.
So all checks except PE ratio currently.
And shares outstanding, 125 million to 114. Check mark there as well, Seth.
All right, very good. Let's go to current assets over current liabilities.
Current assets, 1.25 billion. Current liabilities, 1 billion. Check mark there.
Nice.
Free cash flow, you know what to do, Seth.
Oh my Lord, I gotta get out a calculator.
This is what happens when we go to Y charts. It's not as easy as everything money.
Go ahead.
So a negative 115 million and a positive 1 billion. So that's a check mark in terms of growth. And then 400 million.
Mm-hmm.
And then 710 million. 510 million.
You're lucky I caught that.
Yeah, and then 490 million.
Okay, so the average free cash flow over the past 5 years is 457 million. And I'm not quite certain that's a correct number.
Times 20 is $9 billion.
The market cap is $32 billion.
Now, guys.
Why do you laugh?
Well, because it's silly. Look at this.
Silly.
Look at their cash from operations. Look how low it was over the years. And skyrocket. Why? That's weird to me. Did they have some major growth? Let's look at their acquisitions. I mean, they didn't have any. I mean, they spend every year on acquisitions, so they're obviously buying other places. But man, that's a big jump. I mean, they went 10x on their cash from operations in 1 year. 10x. That's incredible. All right, so in terms of Sunbelt Rentals, what would I do? These are the questions you need to ask.
I know.
Your son.
What? What's he doing?
He's in a tank top now. I love it. He's gonna be naked in 2 seconds. The questions you need to ask about this company is, what was the reason for this big jump? This is what we love about the 8 pillars, guys. It makes us ask more questions. When we see big jumps and big drops in numbers, ask the question, why is that? Just like anything, if you owned your own business at home and all of a sudden your revenue fell 30% in 1 year, what would you say? You wouldn't be like, that's fine. You'd be like, okay, why did that happen? What's the reason? Those are the questions you need to ask.
Mo, how is trading looking for this company, Ash?
I mean, look at this thing. Look at this growth that it's had. And don't only look at the growth, but look how tight this growth has been. Look how tight this cluster has been for the stock. This is when you're looking at a power stock. I don't have my moving averages on here because it's foreign, but I'm assuming that it's over all of its major moving averages, and it is very tight cluster moving up. Now, it has. Let's see what's happening right now. What you can do with this. I mean, if you're in this, if you get an engulfment candlestick like that, go ahead and keep adding to it, but just know that you're at a resistance level, and at some point, I think that things are going to turn on you. I don't know when, but if you're not in this right now, do not enter this kind of stock. If you're in it, stick with it and keep adding on newer highs. That's great.
Why would you not enter?
There's better stocks out there. Go find one.
Then why would you add to it then if you already have it?
Because if you're in it, you have clearly made money on the way up. Instead of going and entering on a brand new position, and you're basically playing with the house's money if you have profits, right?
Yeah, but to me, and this is an internal discussion, but to me, I look at it going, if I'm not willing to start the position, why would I be willing to add to the position?
Well, that could be said that the same thing on taking profits. Why would you take profits and put money in your pocket then? But
that's not the same.
Yeah, it is.
No, it's not. You're saying add to the position versus don't start. So 2 people.
But if you have zero, let's say you're up in this thing 30%.
Yeah.
Versus a person that
is. What does it matter what's happened in the past? That's already done.
Because the probability, because you've already made 30%, you're risking. At this point, there's a higher probability that it's going to drop in price because of where the chart is.
Well, then why would you even add to the position? All that matters in the chart reading is what's going to happen in the future. What the past is doesn't matter. See, guys, this is exactly the thing. Like, we even have this, like, I'm even hearing it right now going, I don't agree with that. Like, that doesn't speak to me. To me, I go, if you're telling somebody don't add to the position, why would you ever tell somebody to...
Don't start a position.
Don't start the position? Why would you tell somebody to add the position then? That's it. Adding the position is the same as starting a new position. It's just changing the tickers.
Your rebuttal mode.
It's changing the cost basis.
But
if you're already up there, if I'm up 30% in a stock on a chart, I'm fine if I lose 5% on that because it's playing with the house's money at that point. Instead of starting a new position and going into the negative.
But you're playing with the house's money, but that's still profit. So now you're saying, let's say I had no position. You're saying it's not a good company to enter into right now. That's like saying, hey, I like this value company, but if you already have a position, add to it. But I don't like the value. Sorry, I don't like this value company. But if you have a position already, add to it. It's like, but if it's not a good value today, why would I add to it? If it's not a good value, I would never add to it. So if the chart's telling me don't add to it.
Well, it's not telling you don't add to it.
You said it's saying.
I said don't enter for the first time.
But that's the same thing.
No, it's not.
Absolutely, it is.
You're playing with house money.
People in the bid.
That's the difference.
I'm seeing Paul is right.
So you're
Paul
going to throw
is
away
wrong.
good. You're going to throw away good money because
there's still room for it to climb. That it can make new highs, but the
well, then
probability
start a
is not
position.
there.
Then start a new position. Then.
No,
Nick
the
said,
probability is
Nick
not there that it's
said
gonna
this
keep
is
going.
exactly how my wife and I discussed loading the dishwasher. I have this problem with toilet paper this way versus that way. My wife insists on buttoning my top button when she puts it on a hanger. This is absurd, and so is the show. The comments are just flying in, guys, and this is going to lead to fist fighting. Yes, this is a civil war. Paul is right. Paul is wrong. Mo is right. Mo is wrong. What's going on? We love you. Smash the like. That's the show.
This is a good thing.
Go on.
We're all going to have internal discussions. This is our first time really disagreeing on the show. But my view is, if you're not going to start a position, it doesn't matter what's already done. What's done is done. What's done is done. That money's in your hand. If you're playing with the house's money, you do that every single time, even though the position's bad, you're now sacrificing previous profits to now and to buy more. That doesn't make any sense. You already have the profits there, so now you're adding new money to a deal. It's not the house's money because you're adding money to it. You're taking, if you have $1,000 in the account and it goes to $2,000, you're saying add to it. I'm taking money from elsewhere to add to it. I'm not playing with the house's money anymore.
Then that's if you take profits on a position and you put the profits back on. Say you take profits on Friday and you go and put it back on a Monday. You're playing with money you didn't have. It's profits from the position.
Well, then why don't you just stay in the position on Friday?
Because the likelihood of it falling, it's getting rid of the risk, mitigating the risk.
For the weekend.
Exactly.
Yeah, but that's not what we were discussing there before, though.
It could be for the weekend. It could be you're not going to add back to the position.
Final thoughts on Ashted, Paul. I don't even know you know your final thoughts.
What company are we talking about again?
Exactly. That is our take. Yay, we did it. This is the great stuff you're going to get from us. And yes, it is hot in here. All right.
By the way, but somebody just said the cost basis doesn't matter. The cost basis matters if a thing is going down lower and lower and lower, and saying, okay, I like the stock still. I'm going to add to that position. That's the thing that works in value investing. Add to the position as stock goes lower, you're decreasing your cost basis. As it goes higher, you're increasing your cost basis. You're not decreasing your cost basis. You are increasing your cost basis. So now you're taking away from future profit.
If you'd like, I can get Stock Mo on the phone. He can clear this up for us.
He can pull up a 5-minute chart and tell us.
Yeah. Okay. That is our take. The next one, very near and dear to Matthew's heart, prayers for his uncle regarding today's charity. He says, don't be afraid or too proud to ask for help. That's true, Paul. You are a big fan of asking for help.
Absolutely. I have a therapist. I have 2 therapists.
And getting in with your emotions. And so the company, Paul, before you get all fired up again about buying and selling, is RFP. The ticker symbol is RFP. This is Resolute. Stay in Y charts if you would. This is a Canadian company, Paul. This is Resolute Forest Products. The ticker symbol is RFP, formerly known as...
I have all the data. Why is that?
Wow. It's a pulp and paper manufacturer in Montreal, Quebec, and formed by the merger of Botwater and Bit2Be Consolidated. Who knows what's going on? They have about 7,000 employees, founded in 2007. This is basically a Canadian paper mill product, a paper manufacturer.
Was it based out of Montreal?
That's what it says here. I mean, there must be.
I might know the person who owns this company.
Must be funding. The CEO is Richard Garneau.
Wait a second.
You don't know this person, do you?
I might know this person.
How could you? It was founded by...
What do they do, Seth?
Bradley Martin.
Bradley Martin, like the bodybuilder?
Probably. And Richard Garneau is the CEO. Garnois. I don't know how to say his name. I love you. Paul, you don't...
I do not know this person.
Okay. I do not know this person. Let's get after RFP with our 8-pillar analysis. Here we go.
$1.3 billion market cap. Net income, PE, 13, check. Profit margin, 3.2% X. That makes sense. I would have guessed it's going to be a low profit margin. No dividend yield, very low return on assets, very low return on invested capital. So far, I'm underwhelmed.
Underwhelmed?
Yes, so far. Income statement. Revenue over the last 5 years, 3.54 to 2.98. That's a big fat X. Now remember, guys, just like when revenue is going up, we want to see if it's because of acquisitions. When revenue is going down, make sure it's not because they sold assets. That could be the reason and totally justifiable. Net income.
Profit growth over the past 5 years for Resolute Forest Products.
Check mark. They lost 120. They made 98. Look at this last 10 years, Seth. 40 profit, lost 30, lost 684, lost 260, lost 232, lost 120, lost 27, made 270, lost 90, made 98. They've made money in 2 or 3 years of the last 10. Sick.
Okay. How about shares outstanding? This is pillar number 5. We want this going down. Of course.
90 to 81.2.
Okay, it is going down. Perfect. Yep. Perfect. And current assets over current liabilities, my dear friend?
942 million versus 409 million. Check mark there. Plenty of money on hand. Free cash flow. I hope there is free cash flow.
The granddaddy of them all. Pillar number 7. Go ahead, Paul.
All right, ready? Negative 235 to positive 386 with an average of 70. So it's a check mark there. 70 times 20 is 1.4 billion. What's it selling for right now?
1.3 billion.
All right, it's technically a check. I would not be touching this thing at the current price.
How dare you, Paul? This is a growth stock.
Is it a growth stock?
Is it?
I just made that up.
Oh.
I was going to say.
By the way, breaking news, Nate. Breaking news, Paul. Your Bitcoin target price today is...
What did I say earlier? 84 billion?
Mm-hmm.
Let's call it 88 billion.
Mo, your Bitcoin target price.
I moved to 516,000, not 515.
The visionaries on this show. The visionaries. He's so bold and courageous. All right. Mo, are people trading Resolute paper products or whatever the hell they're called?
I mean, it's whatever the hell they're called. You're facing a lot of resistance right now. Your stochastic is kind of, the red line is really sitting on top of the yellow. To me, this is one of those where you go and find a different company to buy. Just get something that you can get that is starting at the bottom of the sweet spot and moving forward. I can't see a direction right now, long or short. It's just kind of going sideways. So for me, I'm just going to go find something else and go on from there.
Kyle's saying obviously the lumber prices have jumped up a zillion degrees in the last degrees. Listen to me, it's
Yes,
so
it
hot
has.
here in the last couple months. So maybe a big jump next year. I would imagine the lumber prices are hurting a paper company, but maybe I don't know how the process is
but
made.
I don't know.
Paul, this stock years ago was upwards of $29-$30, and now it's at 16. You're not touching this puppy, are you?
I'm not touching it. I don't think it's, I look at it going, give me a break. None of the things here scream to me like value in any way. The cash flow is just not consistent. I'm just not a fan. And look, the funny thing is, look at this.
Go ahead.
6 of 8 checks.
Yeah.
No, thank you.
Yeah.
No, thank
Still
you.
not into it, huh?
Yeah, no, thank you. This is exactly the point, guys, about like, not necessarily just this.
Okay, Paul, shall we move on?
We shall. 630 people in the chat.
Let's do this. Let's take a moment of zen, a moment of likeness. If you have not tickled and fondled that thumbs up, please do, because it makes Paul's belly just giggle inside with, and we will get to a shorts check here, Paul, moving forward. We're going to move into our last stock today, but before, if you like what you see, of course, as I just said, tickle the thumbs up. If you're not a patron and you feel alone out there in this investing process, go ahead and join our Patreon below. There's all of our patrons are in the chat and they're all saying wonderful things. That's where all the jokes are coming from. Paul,
And we'd like to thank D. Ritter and David and Jack for joining our Patreon in the last 10 minutes.
all of you have just been entered in to win the brand new Tesla Model 3 we're giving away within the next month, Paul, right?
I think it's going to be before June 15th.
Tim and I are already trying to get together get the names organized and get them in order so we can randomly choose one winner. And so someone's getting a Tesla and it's going to be one of our patrons. So good luck, guys. Okay, Paul, the next company and
how many companies have we done now?
I have this would be number 6 for me.
Oh, okay.
So the 6th company is Stamps.com.
So guys, we're done here on the
this will be
companies.
the last company. This is the ticker symbol is
STMP.
Yep, STMP.
This is a big topic of discussion.
Go on,
when we first started our Patreon, one of our patrons, Phoenix, he loved this thing, and when in the Pulse Super Shorts, we talked about this stock for quite some time. Remember that, Paul?
Yeah, I
That
love
was a
the
lot.
stock. We were just worried about the Postal Service deal they had.
Correct.
And we were looking at like 120 or something like that. I wrote puts at 70 and 100.
Yeah.
And now it's at 200 and some. So, or what's it at?
180.
Yeah, 186.
This is an internet-based mailing and shipping service, Stamps.com. I'm sure you've heard of this before. They are in El Segundo, California, and they were founded in 1996, the dawn of the internet age, to help you ship your packages.
Can I vent about something?
Oh, God, probably not. Go ahead.
My neighbor at the new house keeps calling me, and every time he calls me, he leaves a message. I said, don't call me. Text me when you need something. He keeps calling.
Isn't he moving?
I don't know. He texted me too now.
This
Great.
is the breaking financial
I mean, it's
analysis.
just so funny to me. Like, I
of
literally say, don't call me. I don't answer the phone. Text me. Phone call.
No, the Patreon price will not go back down to $8 for the initial group.
Who asked that question?
A couple people. All right, let's keep going.
$8? This alone right here is worth $8 a month.
All right, here we go, Paul. Let's get after stamps.com.
$3.4 billion market cap. PE of 17, check mark. Healthy profit margin of 25, check mark there. No dividend, really high return on assets and return on invested capital. That's good. That's going to become one of our pillars soon, but more of the Gary Mashuris method of economic profit. So we're going to look at that. So far, 2 checks, Uncle Seth.
This stock, Paul, is currently $184. In May of 2019, it was $34.
Yep.
This is absurd. Okay, revenue growth over the past 5 years is pillar number 3 for Omaha.
387, 795, check mark there. Over doubling in revenue, which makes sense for last year because everything was, but yeah.
Profit growth over the past 5 years?
I really hope it's up a lot. 95 to 196, check mark there.
Perfect. Shares outstanding. We want this number going down, Paul. You know that.
Unfortunately, it is not. 16.9 to 18.36. That's an X, our first X so far.
Current assets over current liabilities for stamps.com.
700 million and 243 million. But even better, total liabilities of 338 million. So they have plenty of cash on hand to pay off all of their debts. $400 million difference, which makes the market cap about 3 billion instead of 3.4 billion.
3 bill for the market cap. Okay, free cash flow growth.
139 to 334. Check mark there with an average of 200. 200 times 20 equals 4 billion. Guys, I actually feel...
Come on, I don't... Go on.
I don't like their shares outstanding increasing. But I actually feel like this company does justify a higher multiple on free cash flow. Because I do think that over time, there's a lot of competition having to do with shipping. Stamps.com has been a name around for 20 years now. If you believe that they're going to be able to help a lot when it comes to U.S. Postal Service and other things, and they'll get hopefully ingrained in UPS and FedEx and helping people and businesses, and I saw commercials for them, then I think this is a company that's growing and can grow further. I'm not as scared of this company at 186 as even seeing it as $34 just in 2019. This actually makes some sense to me. I have not entered a position on it. It's not a value play in my opinion, but I don't think it's an unreasonable play at this level.
Ty is saying that they are buying back 120 million shares. Maybe this is news article.
Well, that's not possible because they don't have 120 million shares outstanding.
Okay, that's...
Are they buying back $120 million worth?
Dollars worth. Sorry.
Okay, that's a lot. That's good.
Yeah, you're right, Paul. People are saying, stamps always go up. They're never going to lower the price of... Well, they could lower the price of stamps if no one ever uses them, but it does get annoying to actually go to the post office nowadays. I mean, the more and more often I'm trying to get stuff printed at home, slap the sticker on there and come get it. So, Mo, what are people doing in terms of trading? Guys, I do see a little lag in the video. Sometimes this is not our fault.
Hit the live button on your screen.
No, I'm saying it's actually slow-mo a bit. I saw this. Listen, Meet Kevin had 20,000 people in a live stream, and it was lagging as well. This just happens sometimes with YouTube. So just bear with us. You all are great. I love you. Mo, are people trading stamps.com in a bid and ask?
You know what? I'm kind of liking this. It did a sweet spot reversal recently, maybe 2 weeks ago, and it's looking like it's going to creep back up there again. So that means red line is going to cross through yellow, and we might start a new uptrend. So this might be something to keep on the watch list. And if it does turn green, like it would on my my charts, and start making good engulfing candlesticks, this thing can make a run. I think you're going to face resistance around 215. But if not, remember, there was a gap that was made right here. I'm assuming it was probably on earnings of some sort.
Gaps will fill, baby.
Gaps will fill, and that was around $280 as a peak.
Oh, so this has some room to run.
This has some room to run if it can get through this resistance point of $215.
If you're bidding ask, if you're in the bid and ask, put this on your watch list, and we will take a look and certainly discuss it. Mo, I jumped in the bid and ask yesterday.
Yeah, I know, you told me.
And people were shocked. They said this is a paid actor. Someone has stolen Seth's computer, and they're talking to bid and ask. It was real me, and yes, I sounded foolish. So,
and guys, help Seth out. Seth wants to get into this stuff, so help Seth, and just like you help everybody else. And Seth is going to eventually be doing this.
This will be fun. Yeah, this will be great. Okay, Paul. Let's. Sorry, guys, your comments are hilarious. So it's a little overpriced at the moment, Paul, right?
No, I think it's fine. If you believe that the future is still going to get better, which, I'll be honest with you guys. I'll be transparent. I think I worry too much about the future of companies as opposed to just saying, listen, if I buy a basket of good stocks that all have the same similar characteristics, I'm going to be wrong on some, I'm going to be right on quite a few. and I'm going to be about right on a big chunk of them. I think you're going to do well on that one. If you have stamps.com as part of a portfolio that fits this criteria, I think you'll do fine. I don't think it's bad, and they're buying shares back now with extra cash flow. Wonderful.
Yeah, they're busting Nate up because he cut to you eating French fries. And,
it's a burger.
It's a hamburger. So this is the cutting edge service you're getting from us. We're going to eat cheeseburgers.
Well, Wendy's also screwed up our order today.
He's spitting out of his mouth as he talks. Paul, okay, it's 12:48. What is on your wrist right there? People are asking.
It's the Rolex Wimbledon edition.
It's I'm assuming
Susie
it's fake.
liked it.
I'm assuming it's fake.
It's fake.
Paul, we did our 6 stocks today, and we have 12 minutes of Q&A today. So let's continue. Again, if you're coming in late, you can join Mo in the morning, every morning at 9 a.m. Eastern, to talk stock news and analysis. Our Patreon-only dedicated live stream every Thursday at 2 p.m. For those of you out there, 2 p.m. Eastern is when we talk just to the patrons, so join us in a couple days. And as always, the big show, Tuesdays at 1. So we can start the comments, keep coming them in. What are leverage ETFs, Paul? What are those?
Leverage ETFs are ETFs exactly that just use leverage, and they really magnify gains and magnify losses. There's also like the triple short NASDAQ maybe?
You can't triple stamp, double stamp.
Either way, they just use leverage. I mean, just like everything else. And the great thing about leverage is it can really magnify your returns. The bad thing about leverage is it can really magnify your losses. That's the problem. But if you think that, that the market's going down and you want to buy a triple short, then go for it. I mean, that's just the thing. I just think it's very risky.
Trader Mo, Shane is asking, is it reasonable to aim for 2% per week in returns for swing trades?
Yeah, I told him I thought that was just a little bit high. I mean, on a consistent basis. I mean, you're going to have them, but on a consistent week-to-week basis, I think that's a little bit high.
What should they be aiming for?
What's that?
What should they be aiming for?
I mean, you're going to have the way I look at it is it's not a week to week what you're doing that week. It's over the year of what you're doing. Some weeks you're going to get great trades of making 15% on a stock. Some weeks you're going to get negatives. I think there's a good balance that you have to have in there. Going back to that triple leverage stuff you were talking about, those are great day trading stocks. LABU, LABD, that's a very important too in the bid and ask nation. They are great because they move 3 to 5% a day sometimes. So that's a great time to get in there and capitalize on that from a day trading aspect. 2
questions to answer real quick. The Thursday live stream currently is just for the upper tiers. We're going to be adding more live streams as we grow to the minions as well. The big thing is we want to have live streams a little more focused. Less people, like those ones get about 100 people on there.
Paul, define what upper tiers are. Define the upper tiers.
Mo's and my tier.
Yes.
When I say that, because my tier is no longer available on Patreon, you have to come into the tiers, and then we'll offer about once a month upgrades. Somebody else asked a great question. What are the pitfalls of the 8 pillars? There's a lot of pitfalls. Just like any sort of investment idea, the 8 pillars aren't a go execute or don't execute based on this. I mean, you saw a company 2 companies ago had 6 of the 8 check marks, and I was like, no way. And there's something like CCL, which has 1 check, and I'm like, I'm buying it. So the benefit of the 8 pillars is it tells you a story, and the story tells you what else to go find out. The downside of the 8 pillars is just like any other metric. It doesn't tell you details about the company. It tells you a very good high-level view, but most investors invest at this high level, 10,000 feet. I'm probably at the 50-foot level. Gary's probably at the 3-foot level, and the 8 pillars is probably right here at the 250-foot level. These are the places we're at. So you guys have made this big leap, went from 10,000 feet to 250, and this is where you're going when the 8 pillars tells you a story about the company. So this is a great question. It's just not going to tell you everything, but we're going to backtest the 8 pillars in the future on our own software at some point and see how well it would have done if you just bought the 8 pillars themselves. My guess is you probably beat the market by how much, I don't know, because I tend to find that anytime you buy companies based on any fundamental analysis, fundamental metrics consistently, you beat the market. The question is by how much.
Somebody just said, did you just call me a minion? we didn't name our lower tier the everything money.
I love the name of minions.
So yeah, that's funny. And the Bid and Ask Nation is that middle Patreon tier. You get access to Trader Mo. Go ahead, Paul.
People want to see, I'm not going to do a stock analysis, but people want to see dark mode.
Oh yeah, if you're coming in, yeah.
Does it really hurt the camera? I mean, does it look bad on the camera though?
I don't know. I'm hosting the show.
But look at this, guys. This is pretty cool.
That is pretty cool.
Yeah, it's very awesome. Stamps.com, our logo, the logo right there. Oh, and by the way, guys, it has financials going back way further. This one has 1999. So now we have data going back to 1987 as long as the company has it. So this is awesome stuff. Our software just got a ton better. We just got you, before it was 10 years of data, now we go back 34 years of data. You're welcome. So for those of you who worry about 80 cents a day, really? And we're adding stuff every single month. We're doing great stuff. This is awesome.
Paul, address this one. Is the channel getting more and more exclusive as it grows? Now Thursday live stream is exclusive as well. Yes, it is, Paul.
Well, so here's our goal. I've talked about this before. My goal all along was to grow the channel. Now it's growing very well. But we were doing 3 videos a day before on the channel. Our goal is to go from 3 videos a day to 1 and focus on the patrons and the people who buy the software and giving them the most content. These 2 extra per day, we want to put on just the software, your app and the website. That way you have another reason to just join the software. We're going to do 1. So right now we do about 85% YouTube and 15% app. We want to flip those around. We want to do 15% YouTube, 85% app. That's the goal of everything. What's so funny, kids? Oh.
Someone else is asking, can I get the software without a Patreon membership?
We will offer that at some point, but it'll be more expensive.
Lewis says, this is lame. Okay, great. This is honest. I mean, listen, I just put myself in this position, Paul. Like, there's a guy out there in the world, and he's watching the show, and he just simply writes, in his mind, he's like, this show sucks, and these guys suck, and he just writes, this is lame, and enters the button, and then... Okay, I love you.
I love it.
Great. Go after yourself. Okay, here we go. Yeah, people are saying they love dark mode. This is great. Paul, there were some crazy questions moving forward about, let's see. Do you think that an interest rate rise will crash the market? Now, we discussed this before, Paul. We very much so try not to do the clickbaity stuff you see all over YouTube. So we don't have these videos where Paul is like completely pooping his pants and it says crash, 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 crash. Everything's crashing down. We don't talk about this often, Paul, but you do expect a market correction in your wisdom, crash in cycles.
I just don't know when.
So considering the market margin debt is at its highest level like ever, where would you go for safety in these markets, in these market conditions?
So I don't think the interest rates are going to drive the debt, which is going to be the problem. Here's what's going to be the problem. Right now, interest rates are 0% essentially, right?
Yep.
So when you see the stock market paying 1.4% dividend, the average investor thinks, well, it's 1.4% return. It's better than 0. And I get to own the stock and it goes up in value. So people put money in stocks. Then stocks go up. Stocks continue to go up, et cetera, et cetera. Now, the justification for it is low interest rates. Why? Because a company that might have made, $1 billion before interest expense 12 years ago and might have spent $200 million on debt has $800 million in profit. But now, because interest rates are so low, that $200 million, now $100 million, and their profit's now $900 million. So they make more money by doing nothing. So what happens when interest rates go back up again? It's going to drive their profit down. If the whole justification for a lower market was for a higher market was the low interest rates, then you would think the other thing would happen. The other incident is this. The other issue is this. Let's say we went to 5% interest. So let's say government bonds over a 10-year period paid 5%. They currently pay 1.4%. Why would I invest in stocks with a long-term return? I'd want to make a big return here. I'd be like, okay, well, I have to make if I can give the government for 5%, I got to make 10 to 12% in the stock market for me to take that risk, or whatever the number ends up being. That's how interest rates drive markets. Because right now, if you're getting 1.4 from the government, you're fine making 6% from the stock market. Why? Because it's still a healthy number over the risk-free rate. No different. So I do think that it could be a capitulation point for the market if rates go up. But I don't think it's needed. Because there is such a frothy market with such euphoria and exuberance that we don't need that. However, a trigger could be the case that that's what causes the final explosion in the stock. But I don't know what it's going to be.
What is a crash? 20%? Someone asked 20% in a month?
A bear market's crash is more about speed and fall. It's not necessarily, I don't know if there's this, maybe 30% is the number. We should look it up. I think 30% might be the number.
Mo, what do you typically think is a market crash?
Oh, well, it's considered a bear market if there's a 20% pullback from the highs. I don't know what a crash is, to be honest.
So a stock market crash is a rapid and often unanticipated drop in stock prices.
It doesn't give a percentage?
It does not give a percentage here.
It's very subjective.
The triggers of yeah. So yeah, who knows what the exact number? I mean, look at last year. We fell 40% in 1 month, right? The Nasdaq fell 83% in 2000. That's a crash. I mean, they're very different numbers, 40% versus 83%. But it's all about a bunch of. I mean, let's say the stock market right now is at 4,200, and let's say every single year just lost 100 points. That's not a crash. Now, duration-wise, it might be it, but it doesn't feel like a crash. It feels like a slow grind kind of thing. Do you know what I mean? It's not a crash. So it's not just necessarily. Gio has a question here, but
Come over here.
come over here and speak in the microphone.
So Discovery, I think that
Yeah, what happened with Discovery?
So I feel like Discovery was less of a crash, more of what you kind of did, because like you'd think it didn't just drop.
Yeah, it did.
Discovery was kind of an event.
Look at this. Look at this, Gio.
That's a crash right there.
That to me is a crash.
Yeah.
Well, I thought it would just went like down slowly, but
No, it would crash pretty hard.
That was a one or 2 day thing.
Crash and burn, baby. Get out of here, you monk.
That was from on March 19th, 77, March 26th, 1 week later, 42.
Yeah, that was a short squeeze.
But no, it's a good point you bring up, but it was a crash. I consider that to be a crash. I mean, it's a big drop in percentage, and it's very quick and sudden.
Someone says it's a crash when Jim Cramer starts crying. Yep. Correction, not crash. Let's see. We'll keep going. Someone asked Paul, what about put options? What are you doing with put options?
I've sold a lot of put in the last year. I did my numbers because this week ends my first full year of doing put options, and Mo and I both made pretty much the exact same. Mo made a little bit more than me, and we were very happy with it. Overall, with our covered calls and puts, I made enough to pay for Dynasty Owner for the year and some.
Yeah, I look at it as I'm so excited for the future when we're really invested. Just this shows what we can do with very little capital relative to what we have that we deployed.
Yeah, I only deployed about 8% of my cash and generated 1.5% total. So that's almost 20% return on my money.
Yeah, it's
on my invested.
The future is going to be awesome.
I made about 17% return on my invested capital last year.
And this is why we tell you guys to learn the options now if you're interested in them, because
eventually you'll want it.
Just like we're doing, eventually you're going to want it. You can dive right into it instead of having to take that month or two to learn, and you'll just be ready to go. And it's incredible. And Seth, you're even doing some options.
Not as much as I'd like. Folks. Paul has maintains multiple businesses upstairs. I myself have 2 other businesses and 2 kids that are keeping me busy. And so as the show develops, we have so many ideas moving forward. But as the show develops, we're going to give you more and more of our time, certainly my time. So Mo, I'm excited to get going on this trading.
Yeah.
And but of course, I'm also entering my busy season. They say I touched the mic too much, Paul, so I'm just going to leave it on. Cool.
Does it cause a noise or something?
No, it's just funny because I'm always fidgeting with the mic, and yeah. Jonathan says, "How's the little book that beats the market?" We will update my little book portfolio. I buy new stocks on July 1st here in a couple months, month and a half here, month and a week. So we'll update you on my portfolio.
My ex-girlfriend's up 16% this year on the little book that beats the market.
What I'm buying, what I will be buying. I'll show you all of it. What happened in the past year. Obviously, it was a pretty good year and better than the market. The book, the stocks did indeed beat the market for sure.
Yeah, what's the market up? I mean, like I said, my ex-girlfriend's up 16% right now this year. And again, I don't look, if it was down 16%, I wouldn't be, oh my God, I just believe in the process. But what's the market up this year? 8, 9%, 10%?
I think that's. I think it's somewhere in that range.
No thighs, no peace. We can do a shorts check.
I mean, if Tim's super
Tim's
busy.
like, yes.
Kevin asked, "Do ETFs make money on the stock going up, or more people investing in the ETF?"
It's the stock going up because when they get money in the ETF, all they do is they go out there and buy more and more shares of those companies.
So here you see Paul with his milky white thighs, those gymnastic legs, and the beautiful tush that's coming around.
J. Crew shorts.
Coming around the waist side.
On sale.
And yes, he has a leather G-string underneath all that. And that is the Paul Shorts section of the show. It's kind of creepy, but we're going for it. That's our show, and you have to like it. And make sure you tickle the thumbs up, like you tickle Paul's little tush, because he's a baby. He's a crying baby. Okay, Paul, what do you think? It's 2:00. What do you think?
I do not rate ex-girlfriends based on their portfolios, but
well, I'm sure you have a little bit.
I only have one ex-girlfriend who has a portfolio that I even look at. How is Tesla doing today? Let's look at Tesla. It is at 602, so up from recent.
Oh, they're back in the 6s. Congrats.
They've been in the 6s.
Maybe it's because I gave them $100.
You did?
to order the car.
Is that how
Oh,
much it
right,
was?
right.
$100.
Only $100 to order the car?
Yeah, non-refundable. Did
For
you ever
reals?
get the email?
Wait a minute, non-refundable. It's always
Non-refundable.
no, yeah. Mo bought a new Tesla last Friday, and he might get it by Christmas. So we'll keep you up.
I doubt it, but we'll see.
But
We'll
boy,
see.
are they going to sell all those cars that they, even though they can't sell them,
Yep.
so or make them?
Yep.
Great. Okay, Paul. What do you think? That is our show for the day. Again, your donations today went to the National Institute of Alcohol Abuse and Alcoholism, and we appreciate your support, patrons. We'll see you on there. Mo's making videos every day for the Bidnass Nation, that middle Patreon tier. And as always, Nate, cue me out. As always, we ask you to tickle a thumbs up, check out the Patreon below, and join us next Tuesday for the big show at 1 p.m., Mo in the morning at 9, and patrons, your live stream, the top tier Patreon live stream will be Thursday at 2 p.m. Paul, final thoughts.
Thanks very much, guys. The software, my focus is the software. It gets better and better. I'm so excited for it. Tim and I are obsessed with it, and it's just gonna become more and more content for you guys, more and more exclusive content for patrons. That's the most important thing. And let me see who else has signed up so I can thank them. Oh, we have a few more signups.
And Paul gets thrown drastically out of focus when you hump that.
Do I?
Yes, absolutely.
I apologize. Othman, Jonathan, Dan, Emilio, and Francisco. Thank you very much for signing up for the software. It's going to change your life.
That's a show. That's a show. We'll see you guys next week. Thanks so much. Tickle
Hey, guys.
thumbs up. See you guys. Appreciate it.